Hello, everyone. This is Zak Gardezy. I'm the host of Money Minutes. I'm also the founder of Wealthstone, a private wealth management firm based out of Scottsdale, Arizona. I'm also a certified financial planner and a private wealth advisor. So, on this week's episode, I want to talk to you about the three overarching themes that are affecting the market right now. So, the first one is all about inflation. Then we'll talk about global conflicts. And then we'll also talk about the tech sector and the overall weakness that we're seeing there. But ultimately, all three of these themes are somewhat related. So I'll talk about how this is all tied in together. So let's get right into it. So let's talk about inflation. Now, we just got the PPI, the Producer Price Index numbers last week. This is for the month of January, so it's the latest numbers, and they came in much hotter than expected. So economists were forecasting a lower number. This data point came in higher. This means that inflation in this area of the economy is higher than what we want it to be, much higher actually. And so why is PPI a big deal? So we've talked about CPI before. That's the consumer price index. That's what we the consumers pay. Like for example, when you go to a restaurant, that is what we pay, those prices. That's the consumer prices. PPI is what the restaurant pays for the product, for the steak, the lobsters that they ultimately end up selling to us. So when PPI numbers come in hotter than expected, think of it like an upstream data point. This means that potentially our prices, what we're going to end up paying at restaurants and at grocery stores, are going to be higher in the near future. That's a terrible sign for the economy, especially as we have the Federal Reserve Chairman changing in May. And this new Federal Reserve Chairman has been very vocal about lowering interest rates. And what happens when interest rates go lower in a quick manner? That means inflation also increases. So you've got multiple forces working together to basically reflect higher inflation, which is a bad sign for the stock market and the overall economy. And we're also seeing gold prices go higher, silver prices, which again is another sign of inflation up ahead. So there's a lot of risk in the inflation category and the inflation theme. And so that's something investors need to pay a lot of attention to. But moving on to global conflicts, this is the biggest news in the world right now. The US and Israel attacked Iran. This resulted in the death of their leader. And now this has resulted in significant regional conflict all over the Middle East. And so why is this important? Well, as we know, a lot of the world's oil supply travels through this part of the world. The Strait of Hormuz, to be specific, is a very narrow strait. 20% of the world's oil supply travels through it. A significant amount of the liquid natural gas flows through this area as well. And so when this part of the world is experiencing conflict, and this has happened before, we typically see energy prices skyrocket, which if prolonged, this could mean potentially recession, global recession, and certainly significant negative impact to the US economy and overall stock market. So this war, the longer it drags out, the worse it will be for the market and for investors. So another major risk factor, and this is being recorded on Sunday, March 1st. When the market opens up, I expect oil prices to skyrocket. I expect the stock market to have a very negative reaction. And again, another reason why we need to be thinking with our risk management perspective this year and not being super aggressive with our investments. And then moving into the third category, which is the tech sector. The tech sector is showing significant signs of weakness right now. And why is that? This really is related to the other two themes as well. The tech sector is very sensitive to risk. So when we see inflationary risk, we see global geopolitical conflicts and risk in that area as well. You're going to see investors be a bit more weary about getting into the tech sector or even taking really great opportunities. For example, Nvidia had a wonderful earnings report, but their stock dropped quite sharply after the report. And we've seen that as a theme so far in this latest earnings season. And that's because, in my opinion, investors are not so confident in the near-term future of the stock market. So even if we get really good news from earnings reports, they're not buying it. And so as an investor, how am I navigating this? How am I navigating this for clients? And again, as I mentioned earlier, it's all about thinking with your risk management hat this year and not thinking super aggressively about how to make the most return or how to chase the next hottest stock. Right now, the most important thing to do, especially after 2 strong years, it's okay to do this, is to go, you know what? I've had 2 strong years. Let's potentially de-risk a little bit. Let's get a little bit conservative. Let's stick to the financial plan if we are over our target allocations, for example, in the stock exposure. And so this is something that it's really important to work with a financial advisor or your financial planner to figure out, are you taking on too much risk? Because if you are, this is definitely not one of those years, in my opinion, where that would be a wise thing to do. So for clients at Wealthstone in the month of December, so at the end of last year, I reduced risk across portfolios, raised cash positions. We're earning interest on that cash, but we're doing this tactically from a risk management perspective. If the market gives us an opportunity to invest, if there's a strong pullback, then of course we'll take advantage of it. Because from a long term point of view, of course, I'm still very optimistic about the stock market, the tech market, AI, and all of the great technologies that are coming out today. But at least in the short term, especially between now and the midterm elections and all of the things going on in the world today, I just don't think from a risk and reward perspective, it makes sense to be taking on a lot of risk at this point. So if you have any questions or would like me to take a look at your portfolio, please don't hesitate to reach out. Thank you very much.